Good morning, students. Today we are going to cover the revisionary session on process costing and joint and byproduct. So welcome to the revisionary session. In today's session, first we will be covering what are the process accounts. And in preparing the process account, sometimes we get abnormal loss, how to prepare abnormal loss account. Sometimes you also have abnormal gain or abnormal effectiveness. We will prepare that. We will also know how to deal with equivalent units and how to prepare the process accounts in case of equivalent production. Then we'll move on to inter-process profits. And finally, we'll do a concept on joint and byproducts. So let us look at how we prepare the process accounts. So generally, you can have either particular unit rate amount and particular unit rate amount. For example, you will write how much is the material used in a process. So maybe you are using 1,000 units and each unit is available at the rate of 10. Therefore, the amount becomes 10,000. Then you introduce labor or wages. You apply labor or wages on that. So there is no units here. Let's say at the rate of 3 rupee per unit. So 3,000 would be the labor cost. And finally, if you apply overheads, let's say another at the rate of 2 rupee per unit. So 1,000 into 2, 2,000 would be your overheads. So what will happen in process account is that the raw material will move into process 1, and from process 1, they will move to process 2, to process 3, and ultimately to finished stock account. So the sequence is important. You cannot change the sequence. First, it has to move from process 1 to process 2, and from process 2 to process 3, and so on. There can be more than 2 processes, more than 3 processes, just about 2 processes. And then they move finally to the finished goods account. So what happens is that the output of process 1 will become the input of process 2. Similarly, the output of process 2 will become the input of process 3. So in this way, what we do is we assume that we transfer the entire units to process 2, next process or process 2. If this is process 1 account, we move the units to process 2. So ultimately, how many units have moved? 1,000 units. Now the total rate is 10 plus 3 plus 2. So it will be 15. So at the rate of 15,000 rupees will be the cost of input for process 2. Okay. You will check that always the units will match with each other. Here also you will have 1,000 units. The amount will be here as 15. Though this may not sum up to, you don't need to do the total for the rate at this stage. So you can ignore this one. And you've simply written here that by process 2, 1,000 units is moving at the rate of 15 to process 2. It may also be possible that when you are preparing the process account, you ignore the rate column. So in that case, only 1,000 units at the rate of raw material, labor, and overheads. So 10,000 is the raw material cost, 5,000 is the labor cost, 3,000 is the labor cost, and 2,000 is the overheads cost. And by transfer to process 2, 1,000 units, here you will write at the rate of 15 rupee per unit. So we have not created the column for rate. We can write here 1,000 units are moving to the next process at the rate of 15 rupee per unit. So the total cost of 1,000 units become 15,000, right? The amount will always tally with the amount. and the units will always tally with the units. So this is how you prepare the process account, simply speaking. Now, as we know that such processes are such a process, what happens is it is possible that whatever you are putting input, the output may not be exactly same and there may be some loss. So let's say if you have put 1,000 units, it is quite possible that you get an output as 900, which means there was a 10% loss. Now we divide the loss into two steps. One could be normal loss. This 100 units which you have lost in the process, this could be a normal loss or this could be a abnormal loss. How we decide whether it is a normal loss or abnormal loss? But sometimes it is also possible that with normal loss, you end up getting abnormal effectiveness or abnormal gain. You may call it effectiveness or gain. Why will this happen? This will happen because past experience and with the technical knowledge of the process, it has been determined that the normal loss is 10%. So if we decide that the normal loss is 10% of the input, so out of 1,000 units, 100 should be lost. That is 10% of 1,000. So here, how many units are lost? Exactly 100. So whatever was normal loss expected, that is the only loss that we have had, which means there is no abnormal loss and there is no abnormal gain. However, let's say if in the same process, we had thought that the normal loss would be 15%. So that means 15% of 1,000 means 150 units. So let's look at this. If the normal loss is 10%, so 10% of 1,000 is exactly equal to 100. And how much was the input? 1,000. And the output is moving to the next process is 900. So normal loss was expected to be 100 units, and we have had the normal loss of exactly 100 units. So therefore, no abnormal gain or loss. No abnormal gain, no abnormal loss. The second scenario could be there is 15% normal loss. So 15% of 1,000 would be 150. But how many units have we lost? Only 100. Though we had expected how many units to be there? 850. So that should have been the output, but our output is 900. So it implies there is an abnormal effectiveness or abnormal gain. If the normal loss would have been 8%, so 8% of 1,000, your normal loss should be only 80 units. But so we had expected the output to be 920. Now, when you compare 900 expected output with 900, you see there is no abnormal gain and abnormal loss. But if we compare 850 with 900, our output is more. We have a gain of 50 units extra. But when we had expected the output to be 920, but it turns out to be 900, then there is a abnormal loss of 20 units. So whatever is the expected normal loss, we will write here by normal loss. So if it is 100, you can see that the units have matching with the units, 1,000 units and 1,000 units. There is no difference, so there is no scope for any abnormal loss or abnormal gain. This is case A. If, let's say, it had been 150, okay? So if it had been 150, we will assume it to be writing it at 150, case B. Now, if you look at the total of the units, on the credit side, you have 1050, whereas on the debit side, you have 1000. So, abnormal gain would come here. Like I said, you will always ensure that your total units should always match with the total units on the debit and credit side. Both should be equal, right? So this is if there is a abnormal gain. Now, case C, what will happen if you move to abnormal gain? We will write it here by process 1. How many units were there? 50 units were there as abnormal gain. Okay. Scenario 3. If the normal loss was 80 units. Now you see the credit side total is 980, but the debit side is 1000. So here only we will write by abnormal loss. How many units? 20 units. So this is the first thing that you must always ensure to see what should be the normal loss in the process. If it is, let's say, 1000, then we have how many units should be made. So if 10% is the normal loss, we should have 900 units. And when we compare 900 units with our actual output, which is moving to process 2, that is also equivalent to 900 units, which means no abnormal gain, no abnormal loss. But if the normal loss is expected to be 150 units, therefore our expected output is 850. When you compare it with 900, you find out that there is 50 units extra. So there is abnormal gain. And when you see that there is expected output should be 920 units and you have made 900 units, there is abnormal loss of 20 units. So we will always write what should be the normal loss as expected. If we produce more than what we had expected, there would be abnormal gain. And if we produce less than what we had expected, after reducing the normal loss. Then if it is less, there will be abnormal loss. Here we assume one thing, that whatever we are producing is immediately moving on to the next process. So we are not going to keep closing stocks for the each process in the process account. However, if the question specifically says that out of 900, there was a closing stock of 100, so you will consider that to ensure to calculate the normal or abnormal loss, gain, etc. You will not say that because 800 units are moving to the next process, so there is a loss of 200. No, the question specifically says that there is a closing stock, so you have to keep the closing stock also as a part of production, right? Another important note you will take care of is that if you keep a closing stock, you will also have in the next period opening stock. So you have to see that the normal loss is as a percentage of total input, which could include opening stock plus currently introduced raw material, or as a percentage of current input. So if this question, for example, had opening stock in the next year, opening stock was there of 100 units, then if you say normal loss is 10% of total input, then the normal loss was expected to be 110 units. But if it is mentioned that normal loss is expected to be 10% of the current input, then it will again be 10% of 1,100. So you have to be careful that normal loss is given as a percentage of total input or current input. Sometimes it is also mentioned that normal loss is a certain percentage of gross production. So if it is a percentage of gross production, what is gross production? It will be opening stock plus current input less closing stock. So if there is 100 unit of opening stock, 1,000 is the current raw material which is processed, put in the process, and there is a closing stock also of 100. So 100 plus 1,000, 1,100 minus 100, again, it will be 10% of 1,000 only. If the opening stock was 500, 500 plus 1,000, 1,500 minus 100, 1,400. So 10% of 1,400 will be 140 units. So is it clear so far? I'll quickly recap. Process accounts are prepared to find out the cost per process at each level, each process. The output of process 1 will move to process 2 as the input, and the output of process 2 will move to next process if there are more than 2 processes, or to finished stock account if there are no subsequent process. The sequence and the order cannot change. You cannot have first process 2 and then process 1. The output of process 1 will only move to process 2. In preparing the process accounts, one assumption that we make generally is that the entire output is moving on to the next process. So generally, we will not keep closing stocks with us. If the question specifically mentions, only then you will keep the closing stocks of the product in the process account. So when you will prepare the process account one also in the next year, you might have opening stocks also. So if that is the scenario, you have to be also careful to check whether normal loss is given as a percentage of total input, current input, or gross production. You will always compare the total units minus normal loss is the expected output. So if your expected output is exactly what you thought, there will be no abnormal gain or abnormal loss. But if the normal output, actual output is more than expected, that means there would be a abnormal gain, which you will place on the debit side of the process account. Whereas if the expected output is less than what the actual output is less than what was expected, there would be abnormal loss. So if 1,000 units, you had expected 900 units to be the output because 10% is the loss. If you have exactly 900 units to be transferred to next process, no abnormal gain, no abnormal loss. If you have less than 900 units, it means there is a case of abnormal loss. And if you have more than 900 units, it's a case of abnormal effectiveness or gain. The normal loss account will be credited only with the normal loss expected units. If we have 950 units, we cannot say that the normal loss is 50. Normal loss is always the expected figure, which is given in the question, right? Now, here we have talked majorly about units. We will also see how we prepare the normal loss account. You can see it was on the credit side of the process account. So here it will be to process one. This is your normal loss units. So it could be 100, it could be 80, whatever. Now, let's say there was no amount here. So that means nothing is measured in terms of money. You will also not prepare the normal loss account. However, sometimes whatever your loss is, the loss may have some scrap value. So if the loss has some scrap value, that means you can sell the units which you thought were a normal loss. So if you say that the normal loss could be sold, let's say at the rate of 2 rupee per unit. It will not be said that the normal loss is sold at 2 rupee per unit. It will be said that the scrap can be sold for 2 rupee per unit. So it means that this 80 or 100 units can be sold at 160, right? 80 into 2, 160. So if in the process we have a normal loss of 80 units, they could be sold at 160. Okay. So this is 80 units which will be sold at 160 rupees. This is how you will prepare the normal loss account, 80 and 160. And similarly, abnormal loss account, but this will not go at 20 into 240. This is not how we will prepare. So let's look at what is the concept here. Let us take an example. Process 1 and then process 2. So material was put in process 1, 1,000 units at the rate of 10. Labor or wages incurred on this material in process 1 is 20,000. So it is more labor intensive, and you have incurred some overhead in the process 1 itself, which is 5,000. In the process 2 also, you incurred some subsequent material. So whatever the material you are receiving from process 1 will move to process 2, but you also had some subsequent material. So let's say the subsequent material introduced was another 5,000. Labor was another 15,000. And overheads were also 10,000. The process 1 normal loss is given as, I'll write normal loss as NL. 10%, and process 2 normal losses, another 10%. So let's prepare process 1 account. First, we will have material, 1000 units at the rate of 10,000. Wages or labor cost, 20,000. And overhead, 5,000. Normal loss is expected 10%. So 10% of 1,000, 100 units. Let us say it has a scrap value of 5 rupees. So we are expecting that units that will move to the next process is 900. But let us say we have been able to transfer the entire output to next process. By process 2, the units transferred were 800. So first, again, 1,000 is not matching here with the 1,000. We have 900 on the credit side. So there is abnormal loss, sorry. There is abnormal loss of 100 units. Now your total on the credit side is matching with the total of the units of the debit and credit are matching. Now, what is the cost of units which have moved to the next process? No matter whether there is abnormal loss, abnormal gain, or anything, you can stop here and you can always do the total on the debit side, which is 35,000. So you will have total cost minus scrap value of normal loss. So out of your 35,000, you were able to recover 5,500 from the sale of normal loss units, from the sale of scrap. So the total cost is 34,500, which you have to allocate between these units. So this must always be divided by total units minus normal loss units. This is your base. This will remain as it is. So if the normal loss does not realize anything, you will have this 0. And total units are 1,000. Normal loss units are 100. 1,000 minus 100. So this will establish your cost per unit. 34,500 divided by 900. This is your cost, which comes out to be 38.33 rupees per unit, rounded off till 2 decimal numbers. Okay. So how many units are moving to process 2? 800. This will also move at 38.33. And the normal loss is also not recovered at realizable value. It will also be said as 38.33. If 920 units were made, then 20 units would come here as 2 abnormal gain. 20 units, this will also be at the rate of 38.33. So only normal loss is taken at scrap value. Rest everything is taken at total cost minus scrap realized from sale of normal loss and total units minus normal loss units. So if you multiply this figure with 800, you end up getting 30,667 rounded off. And if you multiply it by 100, you end up getting 3833. 0.33 is ignored. Okay. You will see that your totals will always match. 10 plus 20, 30, and 5,000, 35,000. Here, what do you have? 3833 plus 30667 plus 500. So you end up getting 35,000. Always remember this formula will remain fundamentally same no matter whether there is abnormal gain, abnormal loss, or whatever. So we had expected out of 1,000 units, 100 will go as normal loss. So but they will be sold at the rate of 5 rupee per unit. So when you will prepare the normal loss account, you can write here to process 100 units, but which were sold at the rate of 5 rupee per unit. Okay. And when you will prepare the abnormal loss account, here also you can write to process 1. There were 100 units of abnormal loss costing 3833. So whatever the abnormal loss or abnormal gain is, the treatment is that they move to the costing P&L account. Costing profit and loss account. But do you think our loss is exactly 3833? Is that the loss we have suffered? No. Why? Because just like you have sold scrap of normal loss, the dealer will not say that I'm not going to buy this scrap from you because this is your abnormal loss. He will still buy these 100 units also. So if out of 1,000, you could transfer only 800 units to the next process, it implies that you had a loss of 200. For a scrap dealer, it doesn't matter whether it's your normal loss or abnormal. He is going to pick up all these units at the rate of 5. So you thought that you should have manufactured more 100 units more at 3833, but and you thought that you could not do that, therefore this is your loss, but you actually sold it. So you sold your 100 units at the rate of 5. So you could recover at least 500 from here, which implies your normal loss is only, which moves to costing P&L is 3,333. So 3,833 you thought was your loss, but somehow, luckily, you could recover 500 out of that. So your true loss is only 3,333. Okay. And similarly, you can also complete your normal loss account by selling these 100 units at 500, and your normal loss account is complete. Units will always match with units, amount will always match with amount. Okay. So this is your process 1 account complete. What entry do you have for process 2 here? By process 2, 800 units at 38.33 costing 30,667. So when we prepare process 2 account, you have how many units coming from process 1? 800 units at the rate of 30,667. So they were at the rate of 38.33 rupee per unit, right? Now you introduced sundry material or subsequent material in this process also. It is not the main material which is giving you units. It's only subsequent material, 5,000. So no units will move here. To labor and to overheads. These overheads are specific to process 2. 5,000 was specific to process 1, 10,000 is specific to process 2. So you had incurred labor and overheads. One important information here, you may also have general overheads or indirect overheads. In totality, let's say another 5,000, which may be given to be allocated to process 1 and 2. So it is possible that you may not be given overhead specific to the specific process, but it may be given generally combined, which you need to allocate to process 1 and process 2. If some ratio is mentioned, in which ratio they will move, it's good enough. Otherwise, you can move it in the ratio of the wages or the labor cost. Now, process 2 also had a normal loss of 10%. So 10% of 800, we had expected the loss to be 80. And therefore, we are expecting that if process 2 is the last process, finished goods stock account should have 720 units. But we see that in the next process, by transfer to finished stock account, we have 750 units. So whatever the units have moved to the finished stock account, you will write here. And what should be the normal loss, you will write here. Once this is done, you first compare the units. On the debit side, you have 800. And on the credit side, you have 830. So wherever you have the higher unit, write that. And on the debit side, you will have abnormal gain then. The difference will go to either abnormal gain or loss. If the difference is credit balance is there, you will have abnormal gain of 30 units there. If the debit side was more or debit balance is there, then you will have abnormal loss. Right? So far done. Now let's talk about amount. So like I said, how you calculate the amount, you take the total cost. The scrap was sold for, let's say process 2 is scrap is sold at the rate of 7. So scrap realized is 7. So 80 into 7, 560 rupees you have realized from the sale of scrap. So now you remember total cost minus whatever you realize from the sale of scrap value. So your total cost is 60,667, out of which 560 is realized from scrap. Total units should be 800 minus 80. So this becomes your fundamental rule. 60667 minus 560. Your cost should be 60107, total cost, which is to be allocated amongst finished stock and normal loss or abnormal gain, divided by 720. $83.48. Now, 750 into 83.48 is 62,610. And the total on the credit side becomes 62,610 plus 560. It is 63,170. So the cost of abnormal gain also will be at the rate of 83.48. Now do one more thing here. 30 into 83.48 is 2504.4. Okay. But instead of writing here 2504, just ensure that your totals match. So rounding off is not necessarily here that if it is more than zero point 0.5, you take to the next number. And if it is less than zero point 0.5, you take to the lower number. Your rounding off here should be to match this figure of 63,170. Okay. So 63,170 minus 30,667 minus 30,000. It should be 2503. So though the figure came out to be 2504 point something, but I'll write it as 2503. Or you could have made this one as 62,611. If you had done that, you would have here 2504. Okay. So ensure that this figure is your balancing figure also. So rounding off has to be done in that manner also. Only otherwise in the exam you will feel pressurized that why your debits and credits are not matching. Nothing wrong. It's all about rounding off, right? So here in process 2, what was expected? 800 units were supposed to be there. Out of that, 80 units should have gone to scrap. Therefore, we should have an output of 720, but we have an output of 750, which implies we have an abnormal gain of 30. And when we multiplied the 30 with 83.48, which is the value of output after process 2, we thought that there is a gain of 2504. So in the abnormal gain account, we will write 30 units is our abnormal gain at the rate of 2504. So by process 2, there is abnormal gain of 30 units, 2504. But do you think that your gain is exactly of 2504, which should move to costing P&L? No. Why? Because we thought we will be having 80 units to sell as scrap. And we would be able to realize 80 units into 7, 560. But if out of 800, 750 units is moving to the next process or finished stock account, your scrap is only 50 units. So you could realize only 50 into 7, 350 rupees. So the 30 units, which would have fetched us 7 rupees, 210, this has become our loss. In a sense, now we don't have this money, this much amount to realize from scrap. So who will bear the loss? Now here in process 1, it was this. But if we make the normal loss account for process 2, I'll make separate accounts, normal loss account for process 2. I'll again have to process 2, 80 units, which should be sold at 560. But I don't have 30 units, which have been eaten up by the abnormal gain account, which could have given me 210 rupees. So I could only sell 50 units and I could get only 350 rupees in the bank. Once again, units will total with the units, amount will total with the amount. So who will bear the, I do have a gain, abnormal gain, but it is not 2504 because out of 2504, Otherwise, also, I would have ended up getting 210. So the true benefit is only, I'll charge this to the normal loss account. The 30 units which could have fetched me 210, I don't have that. So the balance will only move to costing P&L account. So in a sense, my true profit is 2504 minus 210, 2294. Is this clear concept? How we prepare the abnormal gain account? This is for process 2. This is for process 1. So if it is an abnormal loss, you will not charge the total amount to the costing P&L because you will recover something from the scrap. And similarly, if there is abnormal gain, you will not credit all the amount to the P&L, costing P&L. You will write off some amount which could have otherwise also recovered in the form of scrap, which you will not recover now because now your scrap is only 50 units, which you will sell at 7. So 30 units which could have been sold at 210 rupees in total is your not, you are not going to realize that, which you will charge from the abnormal gain account in the normal loss account, right? So this is the basics of the process account that we do. I hope you are clear with this. If there is any question, you may please ask. Unmute and ask if you want, or you can type it in the chat. Kavisha, Kavya, all everything clear? All right. So let's move on to the next concept, which is statement of equivalent production. So how do you tackle closing stocks? How you tackle if your units are incomplete? I'll ask you a simple question here. Let us say you sit down on a particular day to complete some chapters. You start with your chapter 1. You do it only 20% and you find it very boring or too difficult. You leave it there. Then you start with chapter 2 and you end up doing 50% of that. And then you realize that there is some other chapter which is more important. So chapter 3 is what you pick up and you complete it 80%. And then the day is over. So how much work have you done? How many chapters have you completed? So technically speaking, it is 0. None of the chapter is complete. But if I calculate the equivalent chapters completed, I can say one chapter 20% complete, which is equivalent to 0.2. One chapter 50% complete, which is equivalent to 0.5. And one chapter 80% complete, which is equivalent to, I can write either 0.5 or 0.80. 0.80. So in a sense, you have been able to complete 1.5 chapters as equivalent units. So it's not that whatever you have done is 0. Whatever you have done has some value. So it's equivalent to as if you have completed 1.5 chapter in a day while you were revising your syllabus for the intermediate. Okay. So when next day you will pick up, you will first complete your chapter 1, 80%. So this becomes your opening stock for the next day. So already if 20% is done, you will now do remaining 80%. Chapter 2, 50%, and chapter 3, 20%. So the remaining 1.5 chapter would complete on the next day and maybe pick up 2 more chapters and complete them 100%. So on the second day, you have completed 3.5 chapters. 1.5, the previous opening stock is now complete, and you picked up another 2 chapters which are complete. So this is how you prepare the statement of equivalent units. As a layman, as an example, I can explain. Now, what is the cost per unit for each element of cost? So if I want to see how much is the resources you have used, so if you have used in totality 15 hours a day and you could complete 1.5 chapters, so 15 divided by 1.5, that means that is the time you have spent per chapter. Okay. And then how will you allocate it? So you may have some opening stock, some closing stock, some completed units. These total time which you have spent, resources which you have spent in your efforts, that will be allocated amongst what you have completed, what is your opening, or how much you spent on your completing the previous day's chapters, how much you completed today, so on. And finally, you can prepare the process account. So coming on to process costing here, once again, and taking the example of statement of equivalent units, four statements are required to be prepared when you do a question on equivalent production. So one is the statement of equivalent units. The second is statement of cost per unit for each element of cost. The third is statement of allocation of total cost to the various items, like how much was resources cost was spent on completing opening stock, how much cost was incurred on completing the freshly introduced units now completed, how much was used in your closing work in progress. So opening stock would have been a work in progress, which is now completed. Opening stock of WIP now completed. Freshly introduced material now completed. Closing WIP, which is incomplete as at the end of the year. How much was spent on abnormal loss or abnormal gain? So you can build up the cost of everything. What is the cost of opening stock, freshly introduced, closing WIP, abnormal loss, and finally, normal loss. Okay, I'll give you a few tips here. Number one, normal loss. The cost of normal loss is to be borne by good units. Okay, so the normal loss cost are to be borne by good units. So normal loss is always 0% complete. 0% we assume the efforts or completion. So we do not assign any percentage to normal loss. You cannot say that normal loss is, for example, in this chapter 1, 20% complete. It is the opening WIP for the next day. So now I'll say that chapter 1 requires 80% of efforts to complete. But if it's a normal loss, I will always say that it requires 0% resources to complete. Why? Because that cost is to be borne by the good units only. Secondly, abnormal loss is assumed to be the percentage completion may be given. Just like opening WIP, 20% complete, 50% complete, 80% complete, closing WIP, 30% complete, 60% complete. Similarly, we can say that the abnormal loss is 80% complete, 70% complete. Think about it when you have abnormal loss, when your certain units are not going to the next process, they're defective. It may be possible that you realize the defect when they were 100% completed. Or it is also possible that you realize the mistake or defect in process, during the process. So if the unit is to be scrapped, you will not first complete it. You will not apply more resources on it before throwing it. Like if you're cooking a chapati, baking a bread, if it is burnt from the uh, one side, you will not bake it on the other side again, right? Like if you're doing it on a normal chapati when you are making, if you burn it on the one side, you're not going to first bake it on the other side also and then throw it. You will discard it there and then. So that means when it was 50%, 60% done, you realized it is not worth and you discarded it. However, sometimes you realize that it is defective and only it is 100% complete. So abnormal loss, percentage completion may be given, but if it is not given, if given, you will use that. But otherwise, if not, then you will have to assume that they are 100% complete as to various resources, material, labor, or overheads. Abnormal effectiveness will always be 100% complete. This you will always have to take as 100% complete. Okay. So normal loss is always 0% complete. Abnormal gain is always 100% complete. Abnormal loss, if a percentage is given, use that percentage. Else you will assume it to be 100% complete. And this you can also write as a footnote that you are assuming that the abnormal loss was 100% complete as to various elements of cost, whether material, labor, or overhead. So you prepare a statement of all the total cost you have incurred. You allocate it to opening WIP, freshly introduced, completed, closing WIP, abnormal loss, normal loss, everything. And finally, with that, you are able to prepare the process account. Believe me, students, it is one of the easiest concepts if you understand how to prepare the equivalent units. Everything is given, you just have to present it in a proper format. So let us first learn how to prepare the statement of equivalent units. So for that, I have taken a small question here, example, and the same example we will continue. But in this example, I have not written any amount of rupees anywhere, so that first you understand how to prepare the statement of equivalent units. Now, statement of equivalent units can be prepared either on a FIFO basis, that is first in, first out, or you prepare a weighted average method. Okay. These are the two ways in which you can prepare the statement of equivalent units. Either you can follow the first in, first out, or you may apply the weighted average method. Let us read this. The following data pertains to process 1. There is opening WIP already of 1500 units, and these 1500 units are mentioned to be complete as far as material is concerned, 100%. Labor and overheads are concerned, 33.33 or 33 1 by 3%. So when it is 33 1 by 3%, always take it as 1/3. Overheads also 33 1 by 3%. So already you had 1500 units, which was complete as far as material is concerned, and 1/3 complete as far as labor and overheads are concerned. Then you input another 18,500 units. So the total input in the process is 1500 plus 18,500. 20,000 units. What happened to these 20,000 units? You could not complete 5,000 units. You have a closing WIP. Okay, closing WIP, which is 90% complete as far as material is concerned. And as far as labor and overheads are concerned, they are 30% complete. So out of 20,000, we know that 5,000 units are closing stock. That means 15,000 units should have moved to the next process if everything is okay. But everything is not there. There we also have a normal process loss. Processes generally always have a process. There is a loss of input. You do a process of making ghee out of butter. So it's not that if you take 500 grams of butter, you will get 500 grams of ghee out of that, right? There will be some losses in the process, which is quite normal. So normal process loss is 10%. Like I said, be careful, 10% of current input, total input, or gross production. So if it is current input, it would be 10% of 18,500. But here it is of total input. So it is 10% of 20,000. So there is a normal loss, 2,000. So out of 20, if you have a normal loss of 2,000, remaining is 18. But if out of 18, 5,000 is the incomplete portion, incomplete units, that means in the next process, 13,000 units should have passed. But how many units were transferred to the next process? 12,000. So transfer to next process is 12,000. Now, if you look at the total, you should have input as 20. What is the scenario for the output? Normal loss 2, closing stock 5, transfer to next process 12. Does it make up 20? No. There is a dearth or a shortage of 1,000. So we will assume this 1,000 to be abnormal loss. Okay. So we have an abnormal loss of 1,000. 2,000 plus 5,000, 7. 7 plus 12, 19 plus 1, 20. So our balancing figure comes out to be abnormal loss 20,000. Okay. I hope this is clear. So you had opening units 1,500, which was 100% complete as far as material is concerned and 1/3 complete as far as labor and overheads are concerned. Then you had 18,500 units introduced in the process. 5,000 units was your closing stock, and normal loss was expected to be 2,000. So we had expected to transfer 13,000 completed units to the next process. But how many units we could transfer? Only 12,000, which means 1,000 is assumed to be abnormal loss. Or the missing value is, the difference is, balancing figure is assumed to be abnormal loss. This is how you prepare the statement of equivalent units as per FIFO method. So this format is very important for you. You have to write first inputs, particulars, and units. And then you have the second thing, particulars of outputs, units, material-wise, labor-wise, overheads-wise. How much percent did you complete? And that is equivalent to how many units? How much percent did you complete? Equivalent to how many units? Now, one important aspect here is, if you look at the labor and overheads, it is 1/3 complete as far as opening stock is concerned, both of them. And similarly, it is 30% complete as far as closing stock is there, closing WIP is there. So when this percentage of labor and overheads, wherever given, for opening WIP, for closing WIP, as well as it may also be given sometime for abnormal loss or scrapped units rather. For scrapped units also, when it is, this figure is same across opening WIP, closing WIP, and scrap. Like labor and overhead, 60% completes in the opening WIP, 30% complete in the closing work in progress, 10% complete as far as scrap value was concerned. So when this percentage of labor and overhead is same across all the places wherever this percentage is given. You can do one thing. Instead of having three columns, one for material, one for labor, one for overheads, you may combine the two. You can say labor and overheads. So this will save a lot of precious time in the exam. Okay. But if this percentage is different at any place, then you cannot combine it. You'll have to keep it segregated. All right. So how much was the opening WIP? 1500 units. How many units did you introduce in the process? 18,500. So you have to give the detail of total how many units? 20,000 units. So what has happened to these 20,000 units? We have seen that 10% of the total input was loss, 10% of 20,000. Opening work in progress was 1,500, which you will now complete. Closing WIP was 5,000. And we saw that there is an abnormal loss of 1,000. So we have seen how many units have moved to the next process, 12,000. So in FIFO method, we assume that first these 1,500 units are completed, then they will move. And the balance 10,500 units have moved from those which were freshly introduced and have now been completed. So this will also total to 20,000. 2,000 plus 1,500, 3,500. 3,500 plus 10,500, 14,000. 14 plus 5,000, 19,000. And 1,000, which was our balancing figure. So definitely it will match 20,000 units. This is what has happened to the 20,000 units. Like I said, normal loss is always assumed to be 0% complete. So 2,000 into 0%, 0. 2,000 into 0% is 0. Opening WIP, which will now be completed. So you see that opening WIP was already material-wise 100% complete. So what will you do to it now? Nothing. It's already 100% complete. But labor and overheads wise, it was 1/3 complete or 33, 1/3% complete. So if it was already 1/3 complete, you will have to now work on it as 66.67%. 2/3 efforts will require now. 1,500 into 0%, 0. 1,500 into 66.67 or 2/3, that's equivalent to 1,000. Introduced and completed. So 100% material is also required on this in this year itself and 100% labor. So introduced and now completed is always 100%. So 10,500 into 100%, 10,500 into 100%. Closing WIP 5,000. It is said that it's 90% complete as far as material is concerned and 30% complete as far as labor and overheads are concerned. So 5,000 into 90%, 4,500. And 5,000 into 30%, 1,500. Abnormal loss, like I have said, no specific percentage of scrap completion is given. So it is assumed to be 100% complete and then it was scrapped, which is 1,000 units and 1,000. So the total cost equivalent units of material is 10,500 plus 4,500, 15 plus 1, 16,000. Now, when you will prepare the next statement, allocating and finding out the cost for each element, what you will do is you will have the units 16,000 and the total material cost minus scrap realized from the sale of normal loss. Similarly, how much is the equivalent unit as far as material and labor overheads are concerned, labor and overheads? 1,000 plus 10,500, 11,500 plus 1,500, 13 plus 1, 14. Whatever was the cost incurred on labor will be divided by 14,000 to find out the cost per unit of labor. And whatever the cost of overheads was, that will also be divided by 14,000 to find out the cost per unit of overheads. Okay, we'll do the same question, but do using the FIFO method. Team, there are very few changes that we have to apply when we follow the FIFO method to weighted overheads, weighted average. The first change comes here. Instead of FIFO, you will write statement of equivalent unit using weighted average method. Particular of inputs remains same. Total will also be same. Normal loss will also be same. Closing WIP will also be same. But what will be the second change? This will not be there. And you will not say introduced and completed. You will say only completed units transferred to next process. Transferred to next process, which will be 12,000. So this is one major change, that you will not take opening WIP separately and introduced and completed separately. You will only take 12,000 total units and will assume that to be 100% completed this year itself. So 100% of 12,000 and 100% of 12,000 would be 12,000. Once again, labor and overheads can be combined. We don't need this column. Normal loss is always 0%. Closing WIP was 90% complete as far as material is concerned, and 30% complete as far as labor and overheads was concerned. Abnormal loss, once again, 1,000 units. 2 plus 12, 14 and 5, 19 and 1, 20. This is always assumed to be 100% complete, if no particular price or the degree of completion of scrap is given. So now the equivalent units as far as material is concerned, this is 20,000. But the equivalent units as far as material is concerned is 12 plus 4,500, 16,500 plus 1, 17,500. And 12 plus 2,500, 14,500. So this will be the change in weighted average. While first change comes here and second important change comes here. That's it. You will not segregate the completed units into opening WIP now completed and introduced and completed. You will club the two figures, and the total units transferred will be assumed to be 100% complete this year itself. So the number of equivalent units for material will be 1,500 more, and the number of units for material, labor and overheads would be also 500 more. Why this 1,500 and 500? This 1,500 will be written here, which was 0, and this 1,000 will now be written as 1,500. So this will increase by plus 1,500 and this will increase by 500. So instead of writing 0 and 1,000, you will write 1,500 only in a sense. So they will increase, right? Rest, nothing else is required to be done. Everything will flow automatically. Once the statement of equivalent units is done using FIFO method or weighted average method. After that, we prepare the second statement, which is the statement of cost per unit for each element of cost. So what will happen is, whatever the cost of raw material you have incurred, First, you will write element, let's say material. Total cost incurred on material, for example, 20,000. Equivalent units, under FIFO it was 16,000. So cost per unit, 20,000 divided by 16,000. However, there is one small element here, less scrap realized from normal loss. So you had a normal loss of 2,000 units. If that could be sold at the rate of 1 rupee per unit. So you will subtract 20,000 less 2,000. 18,000 will be divided by 16,000. And you will get the cost per unit for each element of cost. Similarly, labor costs, for example, another 15,000. Equivalent units were 14,000. You will get 15,000 divided by 14,000 cost per labor or labor cost per unit. Cost per unit of labor. Similarly, what was the overheads cost? Even if you have clubbed it there, here you will keep it segregate because the cost will be different. Let's say only 3,000. So 3,000 divided by 14,000. This will give you the overheads cost per unit. This is just an example. Arbitrary figures, these are given. These figures are just taken as an example. Okay, so you get the overhead cost per unit. Now, had this been weighted average, there would have been the third change here. In the material cost, you would also have to add the cost of material in the opening WIP. In the labor cost, you will have to add, this is as per FIFO. Okay. If you use weighted average, what would be the change? Material cost plus opening WIP cost of material will be added here, less scrap realized from sale of normal loss. So if your material cost was 20,000, but if your opening WIP, which was material wise 100% complete, then that the material cost was 3,000 and then minus 2,000. The sale from the scrap of normal loss. So 21,000 would be divided by 17,500. So the equivalent units will change automatically, right? And this 20 and 2 will remain same. All you have to do is add the material cost involved in the opening WIP. Add the labor cost involved in the opening work in progress, which was 1/3 complete. Add the overheads cost, which was the part of opening work in progress, which was 1/3 complete. So the third change will come here. You will remember to add the cost of material in the opening WIP to the material, cost of labor in the opening WIP to the labor, cost of overheads in the opening WIP to the overheads cost. The equivalent units will change automatically. Instead of 16,014, this you will pick up from the statement of equivalent units. This will change to 17,500 and this will change to 14,500. So the cost per unit you will get automatically. Okay. Now let's do the same question. And we will do it, I have changed the figures a bit. Opening stock is same and input of material is also same, 18,500. Closing WIP is same.
Normal process loss is same, 10% of the total, which includes total input, which is opening WIP plus units which you have been put in. So same thing, if input is 1500 plus 18500. So you have a 20,000 units as the input, and output, we can see that closing WIP 5,000 units, normal loss 10% of total input. So once again 10% of 20,000, 2,000. And transfer to next process. So instead of 12,000, now I've taken transfer to next process 15. So how much does this become? 15 plus 5, 20 plus 2, 22. So output is 22, input is 20,000. What has happened? Abnormal gain. Okay. By looking at the question, I can tell you that this question has to be done from FIFO only if you want to do it completely. Equivalent units could have been processed, or that part could have been done using FIFO or weighted average, but the complete question can be done only using FIFO. Why? Because if you look at the opening WIP, which is 100% complete as far as material is concerned, and 1/3 complete as far as labor and overheads is concerned, but the total opening WIP has a combined cost of 15. If you wanted to do it using weighted average, what do we need? We need to know the cost of material in the WIP, cost of labor separately in the opening WIP, cost of overhead separately in the opening WIP. If I bifurcate this into material 8,000, labor 6,000, and overheads 1,000, then it is possible for me to find out do the same question using weighted average. But until and unless I have this bifurcation of 15,000 into material, labor, overheads, I'll not be able to do it using weighted average, truly speaking. Okay. So that means we'll do this question using FIFO. Once again, let's prepare the statement of equivalent units using FIFO, but this time the units transferred is 15. So once again, 1500 and 18,500, which is 20,000. So you will have a normal loss, 2,000 units. Opening WIP now complete, 1,500. Introduced and completed. So total 15,000 units have moved to the next process, out of which 1,500 were the opening WIP, which we now completed. So 13,500 units would be introduced and completed during the process. Closing WIP is mentioned as 5,000. So now if you take a total of this so far, it is 22,000. So instead of abnormal loss, you will have abnormal gain, and you will less. You will not write it on the input side, you will less abnormal gain, 2,000 units. So the total will be 20 again. Less abnormal gain, 2,000 units. Either you can write it in bracket or you can write it less abnormal gain. Let's again move to other elements. Once again, ignoring overheads because the percentage of completion remains same. So instead of labor, I'll call it labor and overheads. Normal loss is 0%. Opening WIP, material already 100% complete. So this time we need to input only 0%. Labor and overheads, 1/3 complete. So now we need to do 2/3 now. 66.67% efforts will go now. Introduced and completed is always 100%. Closing WIP material is 90% and labor and overheads is 30%. Abnormal gain is always 100%. 2000 into 0%, 1500 into 0%, 0, 1500 into 2/3, 1000. 13,500 into 100% is 13,500, both the places. 5,000 into 90% is 4,500. 5,000 into 30% is 1,500. 2,000 into 100% is 2,000 less. 2,000 into 100% is 2,000 less. So the equivalent units for material is 13,500 plus 4,500, 18,000. 18 minus 2, 16,000. Labor, 1,000 plus 13,500, 14,500. 14,500 plus 1,500, 16,000. 16,000 minus 2,000, 14,000. So this is your statement of equivalent units. We'll pick up the cost of raw material, which is 52,000. We'll find out how much is the scrap sold for. It is sold for 2 rupee per unit. So let's prepare the second statement. Statement of cost per unit for each element of cost. First, your element is material. $52,000 is the cost. Less scrap value of normal loss. Okay. How much is the normal loss? 2,000 units. And what was the scrap value? 2 rupee per unit. So 4,000 will be subtracted from here. So total cost is 48,000. Equivalent units, 16,000. So cost per unit, 48 divided by 16, 3 rupee per unit. Second is labor. Cost is 14,000. Equivalent units are also 14,000. Cost per unit is 1. Third element is overheads. Cost is 28,000. Equivalent units are 14,000. Cost per unit is 2. So this is your statement of cost per unit for each element of cost. So material cost was 52 minus 2 per unit realized from the sale of 2,000 units of scrap. So 48. Labor cost was 14,000. 14,000 divided by 14,000 is 1. 28,000 was the overheads cost, which is divided by, again, 14,000. Equivalent units are same for labor and overheads. So this is your second statement, cost per unit for each element. All you have to do is pick up the cost from the question and the equivalent units from the first statement you have prepared and divide. All you have to remember is to subtract the scrap value from the sale of normal loss from the material cost. Then we prepare the statement of allocation of cost. Now we will allocate this cost to the various. Remember, 52,000 was the material cost, plus 14,000 was the labor cost, plus 28,000 was the overheads cost. $94,000 minus 4,000 was realized from the sale of scrap value So what you are going to allocate is 90,000. Earlier it was allocated as material, labor, overheads. Now we are going to allocate it as cost of opening WIP in completion, cost incurred in units introduced and completed, cost incurred in normal loss, cost incurred in abnormal gain or abnormal loss, and cost of closing WIP. So I'll not write the normal loss here because normal loss is always 0%. So the cost will also be taken, absorbed by the normal loss would be 0%. Let's start with the opening WIP now complete. How many units? 1500. Element wise, material, labor, overheads. Material wise 0%, labor and overheads wise 1000. I am writing MLO for material, labor, overheads. You can write either give it a abbreviation, but you do mention your abbreviation in the exam paper or your solution. Units are 1500, element of equivalent units for each element 0, 1000 and 1000. Cost was 3 for material, 1 for labor, 2 for overheads. So equivalent cost 0 into 3, 1000 into 1, 1000 into 2. So how much cost did you incur in completing the opening WIP? 3000. Then we move on to finished goods. Now completed. Introduced material now completed rather. That was 13,500. Equivalent units as far as material, labor and overheads concerned, 13,500, 13,500, 13,500, 3, 1, 2. So you can combine it here. 6 and 13,500 into 6, you can write straight away. 81,000. Closing WIP 5,000. Equivalent units as far as elements are concerned 4,500 and 30% means 1/3. 30% of 5,000, sorry, 30% means 5,000 into 30%, 1,500 units. Once again, cost per unit for each element is 312. So 4,500 into 3 is 13,500, 1,500 and 3,000. So this becomes 18,000. You must be wondering, this has crossed 90. 3 plus 81 plus 18 is more than 90. But you also have to allocate to abnormal gain 2,000 units, which is again 100% complete as far as material, labor, overheads is concerned. So equivalent units are 2,000. Once again, 312, as all are 3,000, you can again club. The total cost is 2,000 into 6. It's 12,000. But in the exam, you will completely write all the figures, okay? Instead of taking this total. Now, if you will see, the total should come out to be 90,000 plus 12,000. This is extra, okay? This will be subtracted. So 3,000 plus 81,000 plus 18,000. This is 1,02,000. And when my abnormal gain will be subtracted from this, you will get 90,000. So the total of this should be 90,000 if you subtract, or if this is total 1,02,000. This is for your verification. This should meet the cost of abnormal gain. Okay. And if there was abnormal loss, Whatever the figure is here, it should meet that only. Nothing is to be subtracted. Now, once you have done, I'm just showing you here, I'll do process it, prepare a proper one in the next account. But if you write the process one account now, isn't it simple? To opening WIP, 1500 units, costing total 15,000. 2 units introduced, 18,500, costing 52,000. 2 wages or labor, 14,000. And overheads, 28,000. Right? We will also have abnormal gain in the process account on the debit side. How many units? 2,000. What value? 12,000. So your units will total to 22,000 and your cost should total to 1,02,000 plus 4,000, 1,06,000. We'll check it. 15 plus 52, 67, 67 plus 14, 81, 81 plus 28, 1,09,000, just 15,000 plus 52,000 plus 14,000 plus 28,000 plus 12,000. 121. By normal loss, 2,000 units, which are giving us 4,000 rupees. By next process, transfer to next process. I'll keep it, wait for that a bit. Closing WIP, 18. What else? Nothing. Now, why this was 1,06,000 plus something extra? Why 121? Because your opening WIP had a value of 15,000. This 15 will be extra. Okay? Plus 15. So it should be 121. 15 plus 52 plus 14 plus 28 plus abnormal gain. This is only for your verification. Now, what should be the balancing figure from 121 if I subtract 18 and 422? My answer should be 99,000. Do I see how much do I incur on opening WIP? 3. How much I incur on freshly completed units? 81. 81 plus 3 is 84 and plus this 15. 84 plus 15, 99,000. So once you have added this, this and this, that should be your cost of units transferred to next process. You can verify it and you can also see that the balancing figure is also 99,000. So 1,21,000. This is how you prepare the process account in case of equivalent units. Right? You can easily prepare the abnormal loss account. You will write to process 1, 2,000 units, 4,000. By bank, 2,000 units, 4,000. Similarly, you can prepare the abnormal gain account. By process 1, 2,000 units, 12,000. To normal loss, okay, you will have 2,000 units which could not be sold for 4,000 and 2 costing P&L 8,000. So normal loss would be 2,000 units, 4,000, but you will not be able to sell any scrap because out of 20,000 units, see, 18,500 plus 15. So out of this 20,000 units, closing WIP was 5,000 and next process is 15. So you don't have any scrap physically in your hand to be able to sell at 2 rupee per unit. So the normal loss account will be to process 1, 2,000 units, 4,000, and instead of bank, buy abnormal gain 2,000 units, 4,000. Nothing is sold. Okay. Right. We have some questions in the chat. Sorry. Yes, working notes are mandatory in the exam paper. Mujahid, 1,14,000, 90,000. What is 1,14,000? Can you explain what do you mean by 1,40,000, 14,000? Okay. Working notes are mandatory, definitely. But when you are doing the equivalent production question, most of your working are part of the statements only. Almost all the workings are exhibited in the statements only. Nothing is, see, you have given element of cost, less scrap subtracted for the normal loss, equivalent units, divide, you can divide it here, you can show it here as a working, 48,000 divided by 16,000. Or if you want to show it as a working note, 3 working note, you can do that. Or you can write here working note 1, in which you can separately do your calculations. 48,000 divided by 16,000, 14,000 divided by 14,000, and 28,000 divided by 14,000. So yes, working notes are definitely part of your solution in the exam. Very, very important. Okay, so any questions on any doubt or any question related to equivalent production or process accounts? We are now moving on to our next topic, and that is inter-process profits. So here also we can follow FIFO, or we can follow weighted average. In exam, going to follow weighted average always, unless specifically asked. Otherwise, it becomes a little complicated. Okay. So if the question is not specifically asking you to follow the weighted average method or FIFO method, you will follow weighted average, and you will mention in the end that the solution is as per the weighted average method. First thing. Secondly, important, closing stock can be valued at prime cost or at works cost. Question may specifically ask you to value closing stock at prime cost or at work cost. Generally, when it will specifically say, it will say prime cost. It will not say work cost. When it will specifically ask you to do it, it will ask you to do it at prime cost. Before you start doing the question, it is this caveat from my side that please look at this, whether any information related to closing stock is mentioned in the question or not. That how you have to value the closing stock. Is it to be valued at prime cost, or is it to be valued at works cost? If nothing is given, we will value it at works cost. So first thing, these questions are not done as per FIFO. These are done as per weighted average majorly, if not specifically asked. Secondly, closing stock may be specifically asked to be valued at prime cost. So before you start proceeding with questions on inter-process profits, it is very, very important that you look at this line in particular. So read the questions towards from the beginning and towards end, that whether closing stock is to be specifically valued at prime cost. Otherwise, what will happen? You'll end up wasting time, you'll end up doing the entire question. And then when towards the end you realize this is given, it will create a lot of problem. Okay. So two things are very important. Why is it different? Why is it important that you know how whether to be valuing closing stock at prime cost or not? So if it is to be valued at prime cost, your order is opening stock plus material introduced plus labor plus overheads. Then you get works cost minus closing WIP, closing stock, not WIP. Cost of production transferred. Then you add profit. But if it is to be, so this is when it is to be valued at works cost, sorry. You will write opening, material, labor, overheads, total works cost, less closing stock, cost of total works cost of produced transferred, add profit, so on. But if it is to be valued at prime cost, your order will change. Opening, material, labor, minus, this will be your total cost, total prime cost, sorry. Closing stock will be subtracted here, minus closing stock. Then your prime cost of units transferred plus overheads. Then your total works cost of units transferred and then profit, add profit. Okay. These two things are important, that you have to see that you are valuing your closing stock at prime cost or at works cost. Firstly. Secondly, questions are to be done using weighted average method. And please ensure that if nothing is mentioned, you will follow weighted average. It becomes easier. And another important thing here is that you will mention this as a note that we are using weighted average method. What is inter-process profit? We have seen that the process 1, whatever it manufactures, moves to process 2, and then it moves to process or finished goods. But sometimes where these processes are done, they may be different departments, different managers, and they may be taken as a profit center. So it becomes important, or the commission of the departmental head may be dependent upon how much profit that process is able to generate. So process 1 will like to transfer the goods to process 2 at a profit. So a markup will be added. Similarly, process 2 will also add a markup and then transfer the goods to finished goods stock account. From there, where they would be sold. Right? So this is the meaning of inter-process profits, where one process is not going to sell the products to the second process at cost, but at some markup or a profit element would be added. Right? So this is important. Another important thing I'd like to tell you here is we don't say sell price from process 1 to process 2. We call it transfer price. And profit is given as a percentage of either cost or as a percentage of transfer price. So if I have a cost of 100 and I am told that profit is 10% of this, 10-20% of this, I can easily calculate. But if profit is given as a percentage of sale or percentage of transfer price, there is one quick way in which you can recalculate it as a percentage of cost. So you see, if the profit is given as, let's say, 5% on cost, 10% on cost, 20% on cost, 25% on cost, 40% on cost. So convert it into fraction. It's 1 by 20, 1 by 10, 1 by 5, 1 by 4, 2 by 5, right? So if it is 1 by 20 on cost, it becomes 1 by 21 on sale. 1 by 10 on cost, 1 by 11 on sale. 1 by 5 on cost, 1 by 6 on sale. 1 by 4 on cost, 1 by 5 on sale. 2 by 5 on cost, 2 by 7 on sale. So you add the two, okay? Now here it is given 1 by 4 on transfer price. So it becomes 1 by 3 on cost. Okay. 1/3 of cost would be the profit charged by both the process. So output of process 1 is transferred to process 2 at 25% profit on transfer price. So process 1 will charge 1/3 on cost. Similarly, continuing with the question, output of process 2 is transferred to finished stock at 20% profit. So 1 by 5 on transfer price is equivalent to 1 by 4 on cost, because you will be able to calculate the cost. Right? So this is important. You've tried to find out the profit as a percentage of cost. After you have done this, questions are simple. All right, I have cluttered it a lot. I'll erase some part. So first, let's read the question. Why I have given you this cost price and selling price, I'm sure everyone is aware of that, but this is, I think, one of the quickest way to get it sorted in the exam. Okay. Right. So A Limited produces AXE, which passes through two processes before it is completed and transferred to the finished stock account. And this data is related to the October 1981 year. Okay, way old question. So could be oft repeated question in the exam. Before I proceed further, I am again repeating, be careful. Closing stock is to be valued at prime cost or not. That must be checked beforehand. Otherwise, you'll use weighted works cost. And secondly, the question is to be solved using weighted average, if not specifically mentioned, to be done in a FIFO. And you will mention both the things that close. If nothing is mentioned, you will say that we have valued the closing stock on works cost. And secondly, that we are using weighted average method. So particulars, opening stock is given for process 1, process 2 and finished stock. Direct materials are given, introduced in the process. Wages, factory overheads, closing stocks are given. Inter-process profits, which is included in the opening stock, is a must, which should be given. If not, we will apply the same rule that if there is an opening stock of 7,500, process 1, it's no profit. But if the process 2 has some opening stock, that means it is coming from process 1. So if it is 9,000, that means 1 by 4, 25% on this is the profit. But if it is specifically given, we will use this figure. Output of 1 is transferred to process 2 at 25% profit on transfer price. Output of profit 2 is transferred to finished stock at 20% on profit on transfer price. Stocks in process are valued at prime cost. I'm first asking you to go through this line, which is very important. Finished stock is valued at a price at which it is received from the process 2, and sales during the period are 1,40,000. You require to prepare the process cost accounts and finished goods accounts showing the profit element at each stage. Okay, so opening stock 15,000, 11,200, 10,500, 3,700. This is how you prepare the inter-process profits, process 1. So your order would be opening stock, material, wages, less prime cost, less closing stock, sorry, which is valued at prime cost. Add overheads. This is cost of goods transfer to process 2. Then you add your profit. And then this is the price at which you will transfer to next process. So let's look at the opening stock, 7,500. Material is 15,000. Wages is 11,200. Overheads are 10,500. And closing stock is 3,700. Opening stock is 7,500. Material is 15,000. Wages are 11,200. Closing stock is to be subtracted from here. Okay, 7,500 plus 15,000 plus 11,200. First, you will subtract the closing stock of 3,700. After that, you will add 10,500. So we can take a total figure here and then we can add 10,500. Now, because it is the first process, there cannot be any element of inter-process profit in this. Okay, there will not be any element of inter-process profits so far. Nothing. So how much is the total? 7,500 plus 15,000 plus 11,200. This makes it 33,700 minus 3,700. So it's 30,000 and plus 10,500. So the total cost is 40,500, which is pure cost. There is no element of profit in the first process. So whatever the closing stock has been brought, I guess this line should not be used here. And there is no element of profit so far. Now we will add profit. How much was the profit? 25% on transfer price, 1 by 4 on transfer price, 1 by 3 on cost. Okay. So we will add 13,500 as part of the profit, in which there is no cost, which is purely profit. So in the next process, what will be the transfer to next process? 40,500 plus 13,500. The cost of which is 40,500 and the profit in which is 13,500. Okay. So transfer to next process, 54,000 worth of goods, the cost of which is 40,500 and the profit in which is 13,500. Total cost, profit. Right? This is how you will prepare the process 1 account. Any doubts? Remember, closing stock is to be subtracted after wages, not after overheads. Process 2 account. Before we bring anything from process 1, the first thing will be opening stock. Opening stock is 9,000 and the inter-process profit included in opening stock is 1,500. 9,000. Inter-process profit included in opening stock is 1,500. Therefore, the cost of opening stock was 7,500. Then from process 1, what has come this year? Goods worth rupees 54,000 has come for total, the cost of which is 40,500, which has a profit of 13,500 in it. Then you incur further material in process 2 as well as wages. So material is 15,750 and wages are 11,250. 15,750 and 11,250. Which has a cost of 15,750 with no profit and cost wages of 11,250 with a cost of 11,250 with no profit. Here we will have to take a total of the prime cost for process 2. So it's 9,000 plus 54,000 plus 15,750 plus 11,250. The total cost is 90,000. The profit in this is 15,000. 13,500 plus 1,500. Therefore, the cost of this is 75,000. You can also do the total 40, 55, 66, 73, 74, 75. Okay, now you will subtract the closing stock, the value of which is 4,500. Now the question is all about unitary method. If the cost of prime cost is total is 90,000, which has 75,000 as cost and 15,000 as profit. Similarly, the closing stock will also have the total of 4,500 can be bifurcated in the ratio of 5:1, you can say. Or you can say that 4,500 is just 5% of 90,000. So you can take 5% of 75,000 and 5% of profit. So whatever way you can work, proportionate. This will move 100% in a proportionate manner. What is the relation of 90,000? How it is bifurcated? 75 in 15. 75 is cost, 15 is profit. Similarly, 4,500 will also have the cost and profit in the exactly same proportion. So when you will subtract this, cost of goods transferred to finished stock. Cost of goods transferred to finished stock. It is 85,500. The cost of which is 71,250. The profit in which is 14,250. Add profit for process 2. Profit was 20% on transfer price. 1/5 on transfer price is 1/4 on cost. Or 25% on cost. So 85,500 into 25%. We add an element of 21,375, which has absolutely no cost, all profit. So the units which move to the next process or to by finished stock account. is 1,06,875, which has a profit of which has a cost of 71,250 and a profit of 14,250 plus 21,375. From time to time, please ensure that you verify your answers by adding these two figures should total to this. So it's 1,06,875. So 1,06,875 costing goods are moving to the finished stock account, which has a cost of 71,250 and a profit of 35,625. Okay. So from here we prepare the finished stock account. So first you will have opening stock, $22,500, which has inter-process profit of 8,250. So the total cost of opening stock, the cost in it, and the profit element in this is 8,250. 22,500 minus 8,250. That means the cost of this was 14,250. Then you brought something from process 2 during the period. 1,06,875 with a cost of 71,250 and a profit of 35,625. Okay. See, finished stock will not employ any material, labor, overheads in this. All you have is a closing stock, 11,250. Closing stock is 11,250. So this is your total cost of finished goods. From this, you will subtract closing stock of 11,250. So your opening total value was 22,500 plus 106,875, which makes it 1,29,375, which has a cost of 14,250 plus 71,250, which is 85,500. And therefore it has a balancing figure of profit of 35,625 plus 8,250, 43,875. Now what is the relation of 11,250 divided by 129,375? The same relation, it's only 0.0869%. This will be applied to 85,500. So 7,435 would be the cost of material. 11,250 minus 7,435. And the profit in this is 3,815. This will be subtracted. So what is the cost of goods sold? I hope I have taken all the figures properly. Minus 11,250. So 1,18,125 is the cost of goods sold. The cost of that is actually 78,065, and the profit in this is 43,875 minus 3,815. So the 40060. Now it has been sold for 1,40,000. The cost will remain same, 78065. So how much is the profit? 21,875. So this will be your total profit. 61,875. Maybe I've taken some figures different, but this you can also verify. How you can verify that the total profit is 61,875? We can see how much was the profit for process 1? 13,500. Plus, how much was the profit for process 2? 21,375. And how much was the profit for process the finished stock account? It is 21,875. When you will total the three, when you will pick up these profits, 1, 2, and 3. So what it is saying, the profit for the first process was 25% on transfer price, 1 by 4 on transfer prices, 1 by 3 on cost. Okay. So 13,500. Then the cost profit for the process 2 was 20% on transfer price. 20% means 1 by 5 on sale, transfer price 1 by 4 on cost. So 9,000 was the opening stock. From process 1, we have moved 54,000 worth of goods, which is costing 40,500 with the profit of this. And we incurred 15,750 and 11,250 as material and labor. And then there was factory overheads and closing stock. So subtracted, sorry, we've not added the overheads here. So after having cost of goods transferred, we'll add the overheads here, 4,500. So this is 90,000. This is 75,750. And this is 14,250. Add 1/4, it's 22,500, which is no profit cost, all profit. So this figure will change to 1,12,500, 75,750, and 36,750. Yes. Right. So from process 2, we are getting 1,12,500, costing 75,750, and profit is 36,750. The opening stock had a inter-process profit of 8250. 22,500 in 8250. $14,250. So when you will total this, this is 90,000. This is 45,000. 1,35,000. So 4,500 is the closing stock. What is the relation of 4,500 to 1,35,000? This is only 0.00033%. When you apply this to 90,000, you get this as 3,000 and this as 1,500. So when you will subtract this, 135 minus 4,500, so 1 lakh. $30,500, costing 87,000, and profit is 3,500. Now, when it is sold for 1,40,000, there is a profit of 9,500. Right? So let's see how this profit comes. For the profit for process 1 is 13,500. I'll use a different coloring to highlight. First profit. Second profit is 22,500. And the third profit is only 9,500. So the total profit is 13,500 plus 22,500 plus 9,500. Okay. And what is the problem? Problem is that when you had a closing stock, some part of profit was blocked here. So in process 2, 750 is blocked, and in process finished goods, 1,500 is blocked. Minus 750 and minus 1,500. So whatever the profit you are generating in process 1, that you will get in process 2, you will get 22,500, and similarly in process 3, you will get, if the sale is 140, you will get 9,500. But when you add the two, there is something else which is inter-process profits which are blocked in the closing stock. So they should be subtracted. So minus 750 and minus 1,500. But at the same time, the inter-process profit which is in opening stock, that will be realized now. Plus 8,250 in the finished goods account and plus 1,500 in process 2. So when you will calculate all these figures, you will end up getting exactly the same number. 45,500 minus 750 plus 8,250. So you can also verify your answer. this 5,300 should be same as all the three profits plus the profits which you have generated from closing stock, which has been blocked in closing stock, will be subtracted, and the one which is now realized in opening stock will be added. Right? So cost accounts are done and finished goods stock account is done, and profit element for each stage can be shown as this. So for first process it is 13,500. For the second process it is 22,500 minus 750 plus 1,500. And for the last finished stock account it is 9,500 plus 8,250 minus 1,500. Okay. All right, team. There was a case study which is also there in your ICAI material. You can do it from there. So in the constraint of time, I'm moving to joint and byproducts. So please do this case study. Definitely, it will really help you understand the equivalent production. Okay. Thank you, Kavisha. So it has MCQs. Please do it. It will be very easy. And if you use the formats, you will be able to do this. Let's move on to the next topic, joint and byproducts. So what is the concept here? When you have joint and byproducts, so the whole question talks about, let's say we take a raw material and we start processing it. So we are processing it till a point. We have incurred already material on this. We have incurred labor expenses and we have incurred overhead expenses also. And after some time, what happens is it splits and it forms maybe 1, 2, 3, many products. So whatever the cost you have incurred on this so far is called as joint cost. Now the whole concept in joint and byproduct is to allocate this joint cost, whatever you have incurred till this point of a time, to find out how much has been incurred on A, how much has been incurred on B, and how much has been incurred on C. So at this split of point, what can emerge can be joint products. When we say joint products, it would mean that A, B, C, all three are equally important. It could also be possibly all three have significant value. Whereas it could also be possibly that A and B are significant and C has negligible value, or maybe it's just a coming out from the scrap or something. So this will be called as byproduct. Sometimes all three can be joint products. Sometimes A could be the main product, B and C could be the byproduct. Sometimes A and B both are joint products and C is a byproduct. Anything can happen. But the entire concept of the chapter is to segregate or allocate this joint cost amongst the three products. So how do we do it? There are different methods. One is physical measurement method. So you can measure how much is the amount. So let's say you have taken 1,000 kgs raw material. This was 600 kgs, this was 200 kgs, and this was 100 kgs, and 100 being lost in the process. So you could allocate the total cost in the ratio of 6, 2, and 1 in the physical measure. Second, you could use net realizable value. So you can take the sales price of this, and when you move to the sales price, you can move backwards. So if you know what is the profit, you can subtract that. And if you know, even after separation, if I incurred 5,000 on this, so I can separate that. So post-separation expenses can be separated. So any information which I have, I can separate, and I can clearly move to a point where I have the value of net realizable value at split off point. So which is generally the method used. There are also other methods like contribution margin, and there can be a survey done by a technical expert to be able to exactly determine what is the allocation of cost incurred on each joint product or joint end byproducts. So we'll understand this using this example. A company will process a raw material in department 1 and it produces three products A, B, X at the split off stage. During the period, 1,80,000 kgs of raw material was processed. So you started with 1,80,000 kgs of raw material, started processing it, and after some time, you had A, B, and X. The total cost is 12,88,000. So the whole question is how you are going to allocate 12,88,000 amongst A, B, and X. A is 18,000 kgs. B is 10,000 kgs. C is 54,000 kgs. So team, I can suggest you one thing you can do during exam is as when you read a question, take the last page or a rough sheet and start doing some calculations simultaneously so that you capture the major crux of the question as and when you are reading. A and B were further processed in department 2 at a cost of 1,80,000 and B at a cost of 1,50,000. X was also further processed at a cost of 1,08,000. So post separation, you have incurred certain expenditure on that 180, 150 and 1,08,000. There is no waste in further processing. So whatever you have is 18,000 only. And then you sold. How much? 17,000. At what price? 12,24,000. Now 17,000 kgs sold implies there is a closing stock of 1,000. As it is specifically mentioned, nothing has been lost in process 2. Subsequent processing. Further processing, no loss of content. This one has been 5,000 sold. That means half sold, half kept at 2,50,000. And X 44,000 sold. Out of 54, 44,000 sold for 7,92,000. So you can find the selling price per unit by dividing if there will be need. But then 10,000 units of X has been kept as closing stock. So almost entire A has been sold, half B has sold, and X 10,000 units are closing stock. There were no opening stocks. Okay. And if these products were sold at split off stage, so have you sold it here itself? You could have sold it at 50. This could have been sold at 40 and this could have been sold at 10. 50, 40, 10. Prepare a statement showing the apportionment of joint cost to A, B and X. So team, we don't need to get to the selling price, final selling price, then subtracting the profit element if it is given, then subtracting the post-separation cost. If we know what could be the sales value at split off point, we can use that as the best method to allocate the joint cost. So if I prepare a statement apportioning the joint cost, I'll write the three products A, B, X, units manufactured 18,000, 10,000, 54,000. Selling price at split off point. So this is my statement of allocating the joint cost. This is 50 per unit, 40 per unit, and 10 per unit. So sales value at split off point. 18,000 into 50. 10,000 into 40. And 54,000 into 10. So this is my sales value at split off point. Can you please help me solve a common problem determining if selling a product without additional processing is more profitable by calculating the incremental profit? Okay, we'll do this. This is a part of the question. So in the constraint of time, so first you can do is you can prepare a statement showing the apportionment of joint cost at selling price at split off point. So which is given 50, 40 and 10. So one of the ways of allocating the joint cost could be how much is the total cost here? 9 plus 4, 13, 13 and 5, 18 lakh 40,000. Okay. So how much is the joint cost? It's 12 lakh 88,000. So what you can do is you can allocate 1288 in this ratio. 18,000 into 50, 10,000 into 40, and 54,000 into 10. You can also have additional column of total here, and 12 lakh 88,000 divided by 18 lakh 40,000 into 90, 9 lakhs. So you can allocate in the ratio of 9 is to 4 is to 5.4. Okay, this is how we can do it. Secondly, as you have specifically asked, I'll get to that. State with supporting calculations whether any of the products should be further processed or not. Okay. See, here we will take up the incremental cost versus incremental revenue. Okay. Now, revenue you can calculate by dividing this. So if 12 lakh 24,000 is divided by 17,000, that means the selling price here is at the rate of 72. For B, 2,50,000 divided by 5,000. The selling price here is at the rate of 50. And 3, 7,92,000 divided by 44,000. The selling price here is 18. Similarly, you can also find out the further processing cost. 1,80,000 divided by 18. So further processing cost for A is 10, right? 1,80,000 divided by 18,000. The further processing cost for B, 1,50,000 divided by 40, 10,000. So it's 15. And the further processing cost for C, 1,08,000 divided by 54,000. It is 2. Okay. So you are incurring incremental cost on A, B, and X of 10, 15, and 2. What is the incremental revenue you are getting? You have to see that. So earlier you were selling at 50. Now you are selling at 72. So incremental revenue is 22. Earlier you were selling at 40. Now you are selling at 50. So incremental revenue is plus 10 for B. And earlier you were selling for 10. Now you are selling for 18. So it is plus 8. Is it clear? So it's a very simple concept. Earlier you were selling for 50. Now you are selling for 72. So you're getting 22 rupees extra. Similarly, earlier you were selling for 40. Now you are selling for 50. You're getting 10 rupees extra. Earlier you were selling for 10. Now you are selling for 18. So you're getting 8 rupees extra. And what extra you are incurring? 180, 150 and 1,08,000. 1,80,000 on 18,000 kgs. So per kg, 10 rupees extra. 1,50,000 on 10,000 kgs, 15 rupees extra. 1,08,000 on 54,000 kgs, 2 rupees extra. So by incurring 10 rupees more, you're getting 22 rupees extra per kg. So it's plus 12. You will process A further. By incurring 15 rupees extra, you are able to get only 10 rupees more. It's a loss. So B should not be processed further. X, by incurring 2 rupees extra, you were able to generate 8 rupees extra. So it's plus 6. That means X and A should be processed further. But not B. B should be sold at split off point only. Okay. So in a sense, by this calculation, we have done it. And if you have anything else to ask, I can explain that. See, we prepare a statement apportioning the joint cost. Here you will be able to calculate the joint cost. Let me do it for A. So 12,88,000 divided by 18,40,000 into 99 lakh. So it is 6,30,000. So basically, once you calculate this ratio, it comes out to be 70%, 0.7. So this will be 280. And similarly, this will be 540 into 0.7. 3,78,000. So when you'll divide 6,30,000 with 18,000 kgs, we will be able to find out what is the cost, joint cost, allocation of joint cost. So in this method, I have used the selling price at split off point. We could have used other methods also, like I could have gone by the sales value. Okay. And in sales value, I could have subtracted the post separation cost. But remember, we have a problem here in the sense that there is 1,000 closing stock. So you will have to take the sales value of 18,000 at 72. So 18,000 into 72, 10,000 into 50, and 54,000 into 18. 18,000 into 72. Then 40,000, 10,000, sorry, multiplied by 50 and 54,000 into 18. We could have used that also. Okay. Thank you, Kavisha. So team, I hope you've understood in the constraint of time. If you have any other queries, I'll take up. Otherwise, we can end the session. If you want to allocate the joint cost at the split off point, you will use this. If you want to use the net realization value, you will find out the cost per unit at which the units are sold. Then 18,000 into 72, 10,000 into 50, and 54,000 into 18, less post separation costs, which are 180, 150, and 1,08,000. That will give you a ratio in which the joint cost should be allocated. Right? So then you can see what is the joint cost. Then you will get the cost per unit, plus you will add to this 10, 15, and 2. That will be the total cost. And you can prepare the total profit. Total profit would be simple. Here you will have 72 minus share in joint cost plus 10. 50 minus share in joint cost plus 15. All you have to take care of is closing stock. Okay. This is allocation of joint cost on the basis of sales value at split off point. If you want to use net realization, you will take total sales plus you will add to that the cost of production of your closing stock as well. And from there, you will separate the sales value, you will get the profit. Profit you can otherwise also get by simply subtracting 72 minus the total cost that you incur, that is share of joint cost plus the post separation cost. Okay. So I hope the session was fruitful. You were able to recover and recall all the concepts of process and joint and byproducts to some extent. And all the best to you for your exams. And I'm sure you will come up with what flying colors. Any other question, please ask. Otherwise, we can end the session. Please do the case studies, etc., from your ICAI material, definitely. Okay. Any questions? All right. All right. Thank you, everyone. So calling it a day. Thank you. Bye. All the best. So we can end the session. Okay. Thank you. Bye.